Hey traders, John Howell here. I want to talk about in today's video, I want to talk about why I believe trucks driving past, they're saying hello to you guys. They're saying get ready for a rough and tumble week. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, let's get straight into today. So I want to get mainly focused today on just the stock market itself because I did a video last week, and in last week's video I talked about why I see that there is probably likely to be more downside coming this week. I still think we're too overstretched in the markets, and I do see we're probably likely to have a bit of a bearish week in the markets this week. When looking at all the stocks and so on and so forth. Now, just a general view, guys, like what I'm about to share with you right now is a bearish view for probably this week, but I see an economic explosion, coming the second half of this year. So maybe the next couple of months is going to be a bit of what I call the shake and bake in the markets, but I truly believe and honestly believe that once we start to roll out, like Texas is already starting to say, all right, guys, just get out and go have some fun. You want to wear a mask? Cool. And that's what they're the leader, and that's what's going to start to happen now moving forward in the markets. And so when you're looking at that, and when you're looking at this here, yes, I believe there's going to be more downside, and the crash, I believe, is going to continue this week. What I believe is that this crash is going to create some amazing buying opportunities. So please look at this as a short-term thing. Crash is going to continue, but then an economic explosion. Like, for what I mean by that is that I actually see a 40,000 Dow by the end of this year. Call me crazy, I know, but after a big pullback, just like we saw at the start of last year, this whole big cough situation, cough situation. I'm not sure if I can say that word in here yet on YouTube, so I say cough, right? A coffee. So we can see what happened here, and then we can see the big move up. I honestly believe that we're going to see that. Well, you're probably likely to see the GDP growth is probably going to just be off these charts. You know, we've had like what 1%, 2%, all that sort of stuff for 10 years plus. Now I honestly see that we're likely to see some pretty big movements in the market, some pretty big movements coming into the markets, and that is going to cause inflation. And so I see towards the end of this year, commodity prices, metals, markets, equities, even probably cryptos going an absolute ballistic towards the end of this year. But that may be the thing that causes the bubble to prick maybe into next year. Or who knows? But I do see a 40,000 Dow coming when I come in that. So I want to preference this video when it comes to that. You know, guys, and obviously when it comes to your trading, there's a lot of things that come into trading, right? Comes in, you know, when you talk about your trading itself, you have your chart reading, you have your trading systems, you have like how do you actually manage the trade, you have like what's the foundation that goes into a good trader, and how do you have good risk management and the long-term process and all that sort of stuff. So guys, I'm running a $7 sale to my complete trading course. It's just $7. I'm running a massive sale. So if you go to johnsflashsale.com for today only, I'm actually running that sale. So go to johnsflashsale.com and check that out. So looking at the Dow Jones, we can see that we are still squeezing up into this overall really tight triangle pattern. And I do see we're probably likely to fail here. I do see. And then we're probably likely to roll out, come back down, and we have a bit of a gap down here around the 29,000. We're probably likely to drop, but not a full-on complete meltdown. But I do see the crash is likely to continue, especially now looking at, say, the S&P 500. If we look at the S&P 500, look what's the S&P 500 has done. We were in this really sort of nice support line coming up. And then we had this sort of squeezing of this pattern here, right? Just this squeezing of sort of this triangle pattern. And then we actually broke down out of this triangle pattern, and we're at this level here right now. So I do see that this little break to the downside is a signal for us. and I'm actually more bearish here, and I do see we're probably likely to see a bit more of a downside movement. And one of the reasons why I say that is that if I look at the S&P 500 from a weekly perspective, and I squeeze my chart up, look at this. What I've just drawn on here is a 52 moving average. Now it's a 52 moving average on a weekly chart, so therefore it's a 52 week moving average. Some people say, is this a 52 day moving average? Is this a 52 hourly moving average? Or if you have a 52 moving average on your chart and you look at a weekly chart, so therefore it's a 52 week moving average. If you look at a 52 moving average and I go to my daily chart, well, that's now calculating the obviously 52 day moving average. So if we go back to the weekly charts and we can see what's happening here, we can see that the distance, when we're trying to buy something, right, and what we're trying to see is we always want to buy low, sell high. But what is high? You know, high could be like expensive in PE ratios, or overstretched. And one of the things that I use to see whether the market's overstretched or not is by using the distance from the 52. Notice how we actually don't get too far away from the moving average before we come back to it. And so whenever we get too far away from it, that's when you know we start to become really overbought or oversold. And the normal rhythm of the markets, we are likely to snap back. We are likely to snap back into a bit of equilibrium, as you can see what happens all the time. And then we go for another run. We have a bit of a snapback and we go for a run. Bit of a snapback, go for a run. Bit of a snapback and go for a run. You know, in that $7 trading course, guys, I think I got 3 or 4 or 2 or 3 videos based on the chart reading stuff, or how to read the charts, stuff like that I've just mentioned just there, in that $7 trading course. So if you just go to johnsflashstyle.com, just $7, that sale that I'm running right now, and you'll be able to see more details about that. But this is one technique you can start to use when utilizing how to read the markets. And it's okay, and that's what's one of the things I'm seeing. Not only am I getting that whole breaking of the triangle pattern, but I'm also getting the distance from the 52 is quite high right now. So it doesn't mean we're going to definitely peak out here. But if I'm looking at, okay, what sort of tools can I use right now to stack up the odds that this is likely to happen? And so therefore, just to pull back down, just a pullback after this massive run from 2,200 up to 4,000, just a nice healthy, that's what it's going to be. It's going to be a nice healthy pullback. If we pull back to 3,500, it's not the end of the world, because guess what? We're probably likely to retrace maybe 50%. So if I draw a Fibonacci level from the low of the cough situation to the high of the cough situation, and we're here right now, just a nice healthy, even a 38% retracement is just down to 3,300. And then that's where the 52 moving average. And as you can see by looking at my weekly chart, look what happens. The moving average what? The moving average also acts as a bit of support, resistance, support, support, support. Look at it all through here, support as well too. So I wouldn't be too surprised if we got that pull back down to here, get people freaked out saying that the top's in, and you're probably going to get your mate Harry Dent come out and say, I told you the top's in. This is just the start of something big. It's all over. Harry Dent says big crashed and all this sort of stuff, right? It's like, and then the market just does that. So I wouldn't be too surprised if that was both situations, what I've just said. Firstly, the market pulls back and all these doom and gloomers come out, including Harry, and says, I told you the top's in. This is the start of something big. And then the market retraces another high. And then he's got to go back into his back cave and, and find some more studies and say, okay, well, it wasn't then, 4,200, that's definitely the high. And then, before you know it, we're at 6,000 on the S&P and he's still saying the top's in. I just laugh at it now. So we can see that. So guys, if we do get that on the big picture of things, it's going to be a nice healthy thing, because you actually want to see that. You don't want to see this market continue to just go up, because then that's called bubble territory. And the same for the Nasdaq as well too. You can see the distance from the 52. And once again, you can see, especially lately, the weekly chart has acted a lot of resistance, a lot of support. Look at all that support through there, not right on it. Not much gone through there, just went straight down. So if we did get a nice pullback down towards this level, which is the 52 moving average, which also goes inside, well, you can see the 52 moving average on the Nasdaq is around that 11,000. So that's on the weekly chart. So if I go back to my daily charts here for a minute, look where all that 11,000 is what is also the gap. So everything's like a bit of a magnet to that level. And then after this has been said and done, and after a few weeks, guess what? It's such a coincidence, isn't it? Like if you think about it, when you look at these markets and you see these markets likely to pull back, it's probably likely to pull back for another week or two. And guess what? Then it's now time for what? The next stimulus package to be passed, and then the market finds support. So it seems like that the stimulus package is going to come in just in time to save the market after the market's had just a nice little healthy pullback in the markets, and away we go. But guys, I see a really, really, really big explosion coming into next year. Coming into the second half of this year. This little pullback that we're seeing, please do your research across all different stocks, because there's going to be a lot of amazing buying opportunities, because I do see that big, absolutely just explosion coming into the second half of this year. So anyway, guys, once again, if you do need help with your trading, guys, then I'm running a massive sale to my trading course, just $7 to help you out. It's got all the foundations, got some chart reading stuff there. It's got a couple of good trading systems in there as well too to follow. Some good trade management, and also the mindset stuff, like what you must know, and a whole bunch of down home country goodness. Also, I share with you my #1 trading system of how I trade the markets and all the details in that $7 trading course. Guys, make sure you hit the like button, hit subscribe button, and also leave a comment below and let me know what you think about what I've said about the second half of this year. Do you think we're going to see rampant inflation, explosion in growth because of all the pumped up demand in this economy? Let me know, guys.